Good evening, traders. It is Wednesday evening, February 12th, and that must mean that it is time for our weekly swing trading video. Very exciting week. Let's take a look at the market, get our bearings, and then let's get to it. So, we've had a week where the market broke out to this new relative high, nice strength higher. So we've got a bullish engulfing pattern in here, and we've got follow through buying after that. Market has had a pattern of gapping higher and then having very compressed intraday ranges. Not great for day trading, but excellent for swing trading options, especially if you're selling bullish, out of the money put spreads like we've been doing since September. Man, has this been a killer good strategy. Let's take a look at last week's picks. For those of you who might be watching this video on YouTube, I start every video off with a recap of the prior week's picks, all of them, not some of them, all of them, so that you can get a feel for the performance. Last week, man, really nice picks. Start out with Amazon. So there's the video last week, February 5th. Boom, winner. That stock has been super strong. So really nice on that one. CTXS, we were capitalizing on this breakout right here. We wanted the stock to stay above the 120 breakout, and it has. So that one's in really nice shape. We've got a week under our belt. In almost every case, I'm trying to stay within 2 weeks of expiration. In some cases, we're able to stay within 1 week. So this week you'll see me focusing on the February 21st expiration. Last week I was focusing on the February 14th expiration. So these spreads should be expiring. Almost every single one of these is a 25% winner. And when you start racking these up, man, oh man, do the earnings start to really pile on. So this week, I think we've got 8 winners this week. CTXS, winner. Let's go into deck. Look at that beauty. We're keying off of that support level right in there. And we might have had a little bit of a dip right here on February 6th early in the day to get that spread done. Stock is off to the races. I like the stock here. I think if you're day trading, it's a nice day trading selection. So really love that breakout. DECK, beautiful. Another winner. eBay. eBay, we're keying off this horizontal breakout and the 100-day moving average. We had a little bit of a scare in here, but popped right back above that level. Great shape. These options will expire worthless. Another winner. Lily, another nice one. That was the breakout that we were keying off of right there for Lily. We had one day where things got a little bit dicey, but by the close it was right back up. No problem on this one either. MasterCard, MA, another nice one. Keying off of that breakout right there at the 325 level. Beautiful. Another winner. PGR. Oh yeah, beautiful. Keying off of this opening gap right here around the $80 level. Hello, really nice. Walmart selling this one into earnings. Walmart will announce, I believe, next week. Yes, the 18th. We're keying off of that 114 support level in the 200-day moving average. It is in beautiful shape. This will expire Friday. Lots of room for movement in it. Like that one a lot. 8 different bullish put spreads, 8 winners. I'm going to try and do the same this week, but I don't have as many candidates this week, but I did add a couple of bearish call spreads that I like. Got a bunch of other stocks that I want to take a look at additionally because they don't have liquid options, but I think they set up well for swing trades if you're a stock buyer, or they set up for good day trades for those of us who day trade. So let's go in and take a look at what we've got for this week. Going to go in, look at the February 12th bullish selections, and let's start right at the top. So we got 6 really nice bullish put spreads. AMD, why do I like it? Really nice strong trading channel up in here. Earnings announcement, a little bit of fluff taken out, boom, stock right back and breaking out to a new relative high. I like this breakout and I want to key off of that level. So we're going to be looking at the February 21 expiration. Again, these spreads are expiring in a little more than a week. 8 trading days. That's it. 7 trading days. In fact, Monday's a holiday, so not even that many days. So let's go and take a look at where those options are trading. We've got the 5250s. And so that's the spread that we'd be looking to do. We're going to come in, we're looking to sell the 52s, and we're looking to buy the 5150s. That puts us right here on the close of that candle, tucked gently underneath that high. So I like that. We've got plenty of room for it to move around. I think the stock is going to continue to grind higher. Right off the screen, you can get a 10-cent credit. It's 10-cent bid offered at 15 cents. We want to try it and get 12 cents for this. Should be able to do it. I wouldn't go rushing into bullish put spreads right now. I'd like a situation where the stock's got to pull back just a little bit for us to get filled. So let's do this. Let's move this strike down. Let's move this strike down. Really easy to do an option stock or just click and drag. So on this spread, the 5150, 51 bullish put spread, which puts us down into this green candle right here. Look, on screen, you've got an 8-cent bid offered at 13 cents. I think you could probably squeeze a dime out of that one right there, the 5150, 51. Selling the February 21, 5150 puts, buying the February 21, $51 puts, doing that for a credit of 10 cents. I like it even better. So there's one. ATVI, nice little breakout here. Choppy stock though. Not one of my favorites just because of the price action, but you can see earnings after the close, rallies up. Look at these long tails. When I say look at these long tails, you should instantly be thinking, the stock moves around. Probably going to be able to get a decent credit if I'm patient. I don't need to rush in and do these spreads right away. Let it come in a little bit. Wait for that pullback. Boom. Put your spread on. So let's see what we can get. Let's go into the February 21 expiration. See if we can get something fairly close to the money with a decent credit to it. So I'm going to be looking at that 60.50 right in here. I'd like to tuck right in on that closing bar right there before the earnings announcement. You can see the long tails under body, so support, support, support. That is a support level. We're going to try and go right in there and see what we can do on that one. So Feb 21, we're going close to the money on all these. So we need time working in our favor. Tick, 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 tick. Every day that goes by, these spreads get better and easier for us to manage. So on that 60.50, $60 bullish put spread, you can see it's 3 cents bid offered at 13 cents. Well, gee, Pete, I don't think I'm going to get a dime for that. I don't think you're going to get a dime for it either. I'm counting on that stock to pull back in here. It's choppy. Let it come in. If it gets down to $61 and maybe 80 cents or so right in here, should be able to get that credit easy. So I like it. There's another one, ATVI. But again, choppy stock, maybe not my favorite, but I think it sets up well if we're patient and we wait for that really good credit. CI, Cigna, earnings right here. Took a couple of days, and again, I probably say this every time. You're not going to always get a true reflection of what the stock wants to do after the earnings announcement. That's why we use strong after earnings search for a lot of these. Look, there's your earnings announcement. What did the stock do after earnings? Nothing, boring. It's not going to go anywhere. Boom! Right to a new relative high. Boom! Follow through buying. Oh, yeah, they love it. And we love it. So let's do a bullish put spread on this. We're going to key off that 212 area right here if we can. You can see right in there, that's the breakout. Actually, 212.50 is the strike we'll probably need to look at. And we're going to go out. I think we're going to have to go out a little bit further in time on this one. So we have to go out to the Feb 28s on these. And let's take a look at that 212 strike. Click on that bid. Click on that ask. You can see 21 cents bid offered at 74 cents. Well, because we've got $2.50 between the strike prices, I want to get 50 cents for this. I think you can get 50 cents for it. That's pretty much in the middle of this bid-ask spread. If you get a tiny little pullback in the stock, maybe down to the 221 level, 220.50 level, just a little bit of a pullback, you'll get your spread, you'll get that price, and then the stock can keep floating higher. CI, we're selling to February 28, 212.50 put. We're buying to February 28, 210 put, doing that for a 50-cent credit. I like it. Etsy. Ooh, this one's really, really close, and it is a choppy stock. So you can see it moving back and forth. But I feel that this breakout is going to hold. It's got earnings coming up on 226, so we've only got one expiration that we can really consider for this one, and I'm going to be looking at the Feb 21 expiration. And we're going to be looking to go as far out of the money as we can. We'll go down to that 50-50 strike price and see what we can get there. 50-50, click that, buy the 50s. So we know there's 50 cents between the strike prices, so we need to get a dime for this. Zero bid, offered at 20 cents, so a dime would be perfectly in the middle. Well, where does 50-50 get us? It gets us right down here inside this little breakout here and pretty close to that 100-day moving average, which I believe is going to hold into earnings. And you can see the stock is trying to break out and it's trying to get in that gap. So I like Etsy, and I think you can get that dime credit pretty easily. So watch this stock. Ideally, we want to see this level maintained, that opening price of 51.60. As long as the stock opens above that tomorrow and it holds that level tomorrow, yeah, look to see if you can get that credit. We're pretty close to the money on this one, but I like it. You only have 7 trading days to wait for this one to work out for you. If it does, you're going to make a 25% return on that spread. Twitter, big gap up. Starts to give back some of the gains. Can't quite hold that 200-day moving average. A little bit of selling pressure comes into the gap, but boom, it's right back above that 200-day moving average. I like Twitter. I like the fact that it's been able to move into this gap. I like this horizontal breakout. I like the fact that it was not able to even come close to that 100-day moving average before getting back above that 200-day moving average. So we're going to be going out to the Feb 21 expiration on this one, and we're going to be keying off of the 35.50 level, which is right there. You can see that low is 35.53. We're going to sell below that price level, so it's got to take out that low for us to be in trouble. And we'll scroll down and see what those puts are trading for. And we've got the 35.50s right here. Click on those. And we'll click on the 35s. You can see that spread is 7 cents bid, offered at 10 cents. Twitter does move around, so if it comes in just a little bit, we should be filled on it. But ultimately tomorrow, I do want to see that 200-day moving average hold. So I want that to hold. I'd love to see the stock challenge it a little bit and then boom, close above it for a second straight day. Then I would really start feeling good about that spread. So let's go with the final one on the list here on the bullish side, WYN. 1, 2 tests, both major moving averages, 100-day, 200-day moving average, double bottom, higher low, actually 1, 2, 3. Really decent support here, heavy volume. This is a coronavirus sell-off. Right now, China is having less and less coronavirus cases, meaning that the growth rate of the virus is slowing. That's good news. Workers are back to work, so investors are not as nervous as they were. So let's see how far we can go down. I really would like to key off of this 125 level. I'd feel very, very safe down there. That means that we're probably going to have to go a little bit further out in time, and we'll go out to Feb 28. So this is about a 2-week spread that we're putting on here. Go down to that 125 strike. And because we've got $1 between the strike prices, we want to get 20 cents for this. 9 cents bid, offered at 18 cents. This stock does move around as well. You can see that by the long tails. So if we get down to that 35, 135 level, I think we can get filled at our credit that we want for that, get that 20-cent credit. So I like win. I would not chase it. I would not chase anything right now. You get a little bit of a market pullback on any of these in the next day or two. Those prices are going to come right in, especially if we've got a spread that's going to be on for 2 weeks. Then you've got more latitude. If we're only selling a Feb 21 bullish put spread, you're going to have to be a little bit more aggressive, and you're going to need immediate help from the stock tomorrow. But on this one, I think if you're a little bit patient, you're going to get that 20-cent credit, and that is going to be a super, super nice one with both of these big major moving averages right down here. I really like that one. Haven't done these in a while. I think well, actually I have. I did an IBM call debit spread, a bearish call spread a couple of weeks ago. I was able to leg out of that very successfully, but for all intents and purposes, for the weekly swing video, that was a loser. But I've got a couple that I like here, and I'm going to outline them for you. Lyft. Lyft had this beautiful horizontal breakout right here before earnings. Then had earnings after the close. It was trying to rally into the number. Boy, did it fall hard. It fell right through the 200-day moving average, right through that horizontal resistance, which was now support. So it's below that support level. I like selling a bearish call spread keying off of that 200-day moving average. So we're going to bring up the option chain, and we're going to go into the Feb 28s, and we're going to see what we can get on this credit spread keying off of that $51 price level. And so I'm going to click on the bid there, click on the ask of the 5150s, and off screen you can see 6 cents bid offered at 18 cents. So we should be able to get our dime pretty easily in there. And the stock would have to rally above the 200-day moving average. Given the reaction to earnings from this level to this level and the strong sell-off we saw today, I think that 200-day moving average is going to be pretty firm, especially getting below this horizontal resistance level, which is the first thing the stock will have to do is to try and recover half of this long red candle. The second thing it'll have to do is to try and close above that horizontal resistance. The third thing it would have to do is to try and get above the opening price today and the 200-day moving average. Pretty tall order for that stock. So let's see what happens with that. But I do like that bearish call spread. There's another stock that I've been watching, Microsoft. I think this one sets up pretty well for a bearish call spread also. Why? We have this nice channel, upward sloping, very tight, and then boom, a big breakout after the earnings report. It went parabolic, and usually when stocks go parabolic like this, they tend to have a retracement pretty quickly. In this case, you see this long, almost engulfing pattern right here. Microsoft did find support today, but this candle is problematic. Will the stock be able to grind all the way back up to that $190 level? Pretty tough. That's what we're going to be looking to take advantage of. So we're going to go in and take a look at the Microsoft February 28 expiration. Actually, I want to go closer than that. I want to go February 21. I don't want to go too far out in time. Let's see what those 190s are for. This spread will not be on for long either. We'll only have this spread on for 7 trading days. Microsoft is a strong stock. I like it. It's a really good stock. So I would not fade this stock long term, but on a short term basis, that is a warning sign. And that's a sign that the stock is going to struggle for a little bit. I'm going to click on that 190 and I'm going to click on that 192.50 call. And right now off screen, you can see that that spread is 38 cents bid offered at 47 cents. For this particular spread, I'd like to be able to get somewhere in the neighborhood of maybe 45 cents for that. 50 would be ideal. So let the stock try and recover a little bit. On this one, we want to see half of that long red candle preserved tomorrow. I don't want to be above that halfway point, and that to me looks like it's probably about the 186.50 level. So kind of use that as a gauge tomorrow. If the market's up on the open tomorrow, right out of the gate, and the stock is flying higher and retracing half of that long red candle, I would probably avoid it. However, if the market is up tomorrow and Microsoft is floundering around, not able to generate anything, and actually weak relative to the market, then I think you really got a good trade to look at in this one. So for that Microsoft spread, we're selling the February 21 190 call, and we are buying the February 21 192.50 call. So those are the spreads for this week, but I do want to just real quickly go through some other stocks that I think set up nicely. It was pretty tough for me to find some decent bullish put spreads this week because most stocks have gone parabolic. They're so far above any kind of major technical support level that we don't have anything to really lean on. If the market does run into trouble for whatever reason, I don't know what possibly could be the speed bump, but if the market does pull back, we really have nothing to lean on for a lot of stocks. So it makes selling out of the money bullish put spreads very, very difficult. But here are some other stocks that I really like the chart on. They did not have liquid options, so I couldn't really highlight them. Some of them as a small trader, if you go in and navigate a wide bid-ask spread, yes, you can get the spreads done. So some of you may be able to take advantage of this and get some decent spreads off. CAH, I really like this. I would key off of that breakout, possibly even use the low here at $57. I love this pattern where the stock has a breakout and it's continuing to drift higher. Like CAH a lot. CAT, hoping to get something done on this one. Just didn't have the right credit. I also don't like cyclicals that much. They scare me because if the economy falters a little bit, if China's coronavirus related activity falls off, it's going to hurt some of these cyclical stocks. So that's one of the reasons that it initially sold off. But it did find support at that 200-day moving average. It did move above the 100-day moving average. So I would try and key off of this 200-day moving average down here, right around that 132.50 level. CAT, I like it. I think it could move higher. I like it a little bit better for day trading than I do for selling bullish put spreads. CMI, same thing. 1, 2. Two tests back above the 200-day moving average. If you can key off of this 160 support level, I think that's a nice spread. This one does not have very liquid options, and I think it may only have monthly options, but I think this is going to present a decent day trading opportunity to the upside. NOW, I like this one a lot too. Has this gap right here after earnings, really nice long tails under body, and the stock is starting to creep higher. You've got this upward sloping trend line that you can lean on. NOW, I like it. MSI, Motorola Solutions. You can see this compression right here and this breakout after earnings. Lots of long tails. Holy cow, this stock really moves around. So I like that breakout in here though, around that 179 level. And I think if you can buy a stock like this on a dip, maybe to that 180 level, you got a good chance to even swing it for a few days and make some decent money on it. It moves. You can see it went from 181 to 186.60, so it's a mover. TMUS, looks like the Sprint deal is going to go through and the stock jumped on the news. Boom. Long green candles closing on their high. I like that 93.60 level. If you get a little bit of a pullback in this stock to that 94.50 level or so, I think that's probably a nice entry point. This stock also has long tails, so it moves around, but I like TMUS. Alta, really illiquid options, but decent price action. They don't announce until 312, so there's a fair amount of time for this stock to move higher. You can see how it's broken out through this horizontal resistance on a long green candle, tested the 200-day moving average. Now it's getting going again. Long tail above body, not crazy about that, but if you can buy down on this 200-day moving average, I think Alta also looks decent. So those are your picks from the week. You've got a couple of bearish call spreads to consider, Lyft and Microsoft. You've also got some really nice bullish put spreads to consider. AMD, I like it. ATVI, kind of a choppy one. Got to watch it a little bit there, but I do like it. Wait, be patient on that one. CI had a nice breakout. We'll just review these charts very quickly. Love that AMD breakout. ATVI, let her come in. Try and get that credit done in there. CI, love this breakout. That is a beautiful breakout. I'd have a fairly high confidence level in CI going. ITSE, we're just keying off of earnings coming up in this breakout here and being fairly close to that 100-day moving average. That's nice. Twitter, you want to see it close above this 200-day moving average tomorrow. At least trade above it. Look for that relative strength. That's the key. And win. If I had to go through and pick my favorites out of all these, I love win because I love this major support right in here. I love that double bottom low. So win and CI would be my two favorites, and then probably AMD after that one. Thank you. If you're watching this YouTube video, then you're seeing this content about 2 days after the fact. I release it real time to members so that they can get these trades off. And if you are watching it on YouTube, please go back and check the performance on each one of these picks. Subscribe to the YouTube channel. Turn on your notifications. You'll always know when I post these new videos. Promise you they'll have a lot of great trades and excellent education. By the way, I want to make one note. In the future, what I plan on building into Option Stalker for those of you who are subscribers is I'm going to have a table in here with all of the bullish put spreads or bearish call spreads listed so that when you interface with your brokerage firm, all you'll have to do is click submit and it'll be a GTC order for one contract and the sale price will be a credit of the difference in the strike prices, so you'll never get filled on it. The next day, if you're trading from your phone, the orders will already be working. All you have to do, check the price of the stock, see if you want to do it, adjust your quantity from one contract to as many contracts as you want to do, and adjust the price from that maximum credit down to the one that we want to get. So if we're looking at a $1 spread between the strike prices, we're going to be looking to get a $1 credit for it initially. You'll never get filled on that, ever. You will not get filled even 5 minutes before expiration. All the way in the money, you probably won't get a $1 credit. But what this will allow you to do is you won't be fumbling around on your phone, trying to find the strike prices, trying to find the expiration dates, trying to remember which ones we're trying to do. All you'll have to do is adjust the quantity and remember the credit that we're trying to receive for it. In general, you know that we're trying to get a 25% return on our margins, so should be relatively easy. A really nice way for you to be able to take advantage of these spreads. I'm also looking at being able to send you a video link on Wednesday night so that you know that this video has been posted and that you know that you need to take action on these trades. We've been killing it on these spreads, so I'm really trying to cater to swing traders. I want you in these trades. They've worked out really, really well. I hope this makes it a lot easier for you. Thank you. Good night. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.